Today is June 16th, 2026, and this is our news brief on tech and small business. U.S. government orders Anthropic to disable Fable 5 and Mythos 5 for all foreign nationals. The findings are that the Trump administration issued an export control directive on June 12th, ordering Anthropic to immediately suspend all access to Fable 5, Mythos 5 for any foreign national, whether inside or outside the US, including Anthropic's own foreign national employees. Anthropic received the order at 5:21 p.m. Eastern and disabled both models for all customers globally to ensure compliance. The government cited a discovered jailbreak technique that could bypass Fable 5's safeguards, giving users access to powerful cybersecurity capabilities in the underlying Mythos model. Anthropic publicly disagreed. We disagree that the finding of a narrow potential jailbreak could be a cause for recalling a commercial model deployed to hundreds of millions of people. Anthropic staff traveled to Washington on June 15th for an in-person meeting with White House officials. No resolution reached as of this publication. So context-wise, Fable 5 was Anthropic's most capable model, released days earlier with claims that exceeds those of any model we've ever made generally available. This is the first time a US government has invoked export control authority to pull a deployed commercial AI model from global access mid-deployment. It follows Trump's June 2nd executive order requesting voluntary 30-day pre-release model access, a request that was voluntary. This directive was not. So overall implications, right? If you're a business relying on a third-party AI model now faces a new category of operational risks, right? Government-mandated shutdowns with no warnings and no timeline for restoration, right? So you have to keep in mind as you're using these types of tools, you may want to have a backup, or also some of the self-hosted models may be an option too. And there's already some responses from other countries, with concerns of, hey, we can't have the US controlling all the AI models like this. Second is SpaceX prices the largest IPO in recorded history at 1.77 trillion valuation. SpaceX priced its IPO at $135 per share on June 11th, raising $75 billion, the largest initial public offering ever recorded, 3 times the previous record set by Alibaba in 2014. The stock closed June 12th at 161, a 19% jump on its debut, with an intraday high of 168 that briefly pushed market cap over 2.21 trillion. So the 1.77 trillion IPO valuation makes SpaceX the 7th largest US company, surpassing Tesla at 1.6 trillion market cap. Elon Musk retained over 82% voting control after the offering, giving him effective unilateral decision-making power over the newly public company. SpaceX merged with xAI in February 2026 in a deal valuing the combined entity at 1.25 trillion, meaning the IPO is a combined bet on aerospace and frontier AI. And fun fact, they actually submitted in their paperwork that they're an AI company, not so much an aerospace company. SpaceX has been the most anticipated IPO in tech history, with estimates ranging from 1.5 to 2 trillion throughout early 2026. Alibaba, as I mentioned earlier, held the previous record for 12 years. SpaceX tripled it in a single transaction. And here are the implications. The IPO sets a new benchmark on how public markets value frontier tech companies at the intersection of AI and physical infrastructure. Musk's near total voting control means SpaceX, xAI, strategic direction remains one person's call regardless of public shareholding, a structural risk institutional investors are accepting. So for operators in AI and tech adjacent businesses, institutional capital is moving aggressively into the convergence of AI physical world systems, a trend also driving Prometheus, a $12 billion raise the same week. So with that, let's talk about Jeff Bezos backed Prometheus, raises $12 billion to build an artificial general engineer. So Prometheus, co-founded by Jeff Bezos and Vic, a former co-founder of Google's Verily Life Science unit, raised $12 billion on June 11 through 13 at a $41 billion valuation. Investors include JP Morgan Chase, Goldman Sachs, BlackRock, institutional capital at the highest tier. So Prometheus' stated mission is an artificial general engineer, an AI software capable of autonomously designing jet engines, drug compounds, and other complex systems from scratch. This is a second fundraise. Prometheus raised $6.2 billion at launch in late 2024, bringing a total capital raise of $18.2 billion. The company has 150 employees in offices in San Fran, London, and Zurich. So context-wise, the artificial general engineer framing positions Prometheus in distinct territory and it targets industrial design and physical world manufacturing automation. Bezos previously backed Anthropic, making him one of the most active mega-billionaire investors across multiple AI frontier bets simultaneously. So implications, physical world AI, not just software automation, is the next major investment thesis, and the capital is now moving at scale. For founders and agencies, the trillion-dollar bets are targeting markets that previous software waves couldn't touch, like engineering, manufacturing, drug design. And for small business operators, this previews AI capabilities coming downstream in 3 to 5 years that will affect sectors far beyond tech, including logistics, construction, and product manufacturing. The New York Fed Empire State Manufacturing Index fell to 5.7 in June 2026 and down from 19.6, a decline of 13.9 points in a single month. Markets had expected a reading of 14. The actual result missed by more than 8 points. New orders and shipments both decline. Inflationary pressures remain elevated with input and selling prices still rising. Employment grew for the 5th consecutive month, and the average work week expanded. The labor market component held even as the activity headline fell sharply. So really the implication to this is the magnitude of the miss, nearly 14 points, is just too large to just say it's noise, even though 1 month doesn't really confirm a trend. But for small business owners in manufacturing, wholesale, supply chain, adjacent sectors, this is an early indicator to monitor for order slowdowns for Q3 of 2026. In Constant Context 2026 Small Business Now report, published in June 10th, surveyed 5,000 plus small business owners and consumers globally. 49% of consumers now discover small businesses via social media, surpassing search engines 40% for the first time on record. In the US, consumer preference for mostly shopping at small businesses tripled over 5 years, from 10% in 2021 to 27% in 2026. AI adoption amongst small to medium-sized businesses jumped from 26% in 2023 to 87% by April 2026, the fastest tech adoption cycle in SMB history. And 73% of small business owners globally identify as creators, 40% primarily as creators, 33% as owner-creator hybrids, and 47% handling all social media management themselves. So a little more context, Google dominance as the default first stop for local businesses discovery has been assumed baseline since early 2010s. This is the first major data point showing social media overtaking it. The AI adoption jumped from 26% to 87% in 3 years, outpaces every prior SMB tech adoption cycle, including website adoption and mobile payment adoption. And the creator identity shift reflects that small business owners no longer see marketing as an outsourced function. They see it as a core to their daily operating role. And here's our daily report for June 16th of 2026. And so follow and stay tuned for more. Yeah.